Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Thursday, November 1st. Start of a new month, and we're a little bit firmer in the overnight trade. We're up around 6 cents in the wheat, around 4 cents in the corn. Beans are up 20 cents, the meal up around $6 a ton, and the soybean oil up around 35 points. Maybe three fronts we're getting the support from. Yesterday's close was pretty good, so we're looking like we're getting a little bit follow through technical buying from yesterday. We're also winding down our harvest of corn and beans, and cash markets continue to be quite firm with the lack of farmer selling that we're seeing from the harvest, so that's another supportive feature for our markets here over the near term. And then China came out with some economic numbers, or PMI, Purchasing Managers Index numbers. They came out a little bit better than a month ago, over the 50% threshold number, and that gave their markets a little bit of support and perhaps a little bit of buying in our markets. So we're starting off on a firmer note for the month. As I said, we got through our harvest, or we're working through our harvest. We got around 91% of the corn done, 87% of the beans. Those are well above average. But as I mentioned, the cash market for corn and beans has been steady firm. As we wind down the harvest, the farmer's not looking to sell at this point in time. And I guess our question is what's going to get the farmer to sell, and thus perhaps some of the strength in the market, no selling above the marketplace, giving way to the buying enthusiasm, and or what buying that we do get in the marketplace, not seeing much resistance from selling. And we also have the front on the world cash prices continuing to firm. We're seeing that we're not really getting the business for corn and wheat as of yet. Egypt was in yesterday and they wound up buying Russian, Romanian, and French wheat. But the interesting thing is that all those prices were seemingly at pretty much at the same price. There wasn't no big difference between those three countries. And they're getting closer to our prices. And we also saw where South Korea may have bought some Chinese and Indian meal, maybe a little disappointing to us, but we are cleaning up world supplies. Israel came in and bought some Ukrainian corn. But my whole point here is that as the farmer is not a seller here in the U.S. and our prices are holding steady and not collapsing as a result of the lack of movement, world prices are starting to appreciate. And we're trying to get to that level of finding out that we're going to start doing that business. And if we start doing that business because the other suppliers are more expensive, I guess the question is, where's the selling going to come from? If the speculator wants to reinvigorate himself in the marketplace, business is coming here and pricing is coming in our marketplace, and the farmer is still an unwilling seller. I guess the scary thing down the road will be, once again, who is going to be the seller in the marketplace if we are going to continue with our firmness that we're seeing here today. Nothing really new in Brazil and or Argentina as far as weather goes, but obviously that'll be an important factor down the road as well. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.